I hate to say things are secrets, right? I don't want to allude to the idea that there are these mystic ways that institutional investors trade, but they don't often talk about their trading methodologies, okay? So there are a couple of things that institutional investors won't tell you, mainly because a lot of the retail traders don't even know who they are. So basically, I want to show you guys exactly what strategies these institutional traders are using by going to their websites, by looking at some of their financial reports and some of their performance reports to give you guys a better idea as to how you can align a trade like the banks. All right, let's roll the intro. All right, guys, let's do it. Welcome back to the channel. If you're new here, welcome to the channel. I like to do deep dives in financial markets, and that's exactly what we're going to do today. There's a lot going on in markets behind the scenes outside of just the technicals, and 97% of traders only use technicals. They never go deeper than that, and that's what this channel is for, okay? So I have 5 hedge funds here that I want to talk to you guys about. These are hedge funds that I monitor on a consistent basis because they make really good trading decisions. One of these hedge funds had a 40% return on about $8 billion last year, and that was the #1 macro hedge fund in all of markets last year. We're going to be talking about that one in just a second. But these funds, they all have a certain commonality, and I want retail traders to pick up on this because once you start adopting the same type of methodologies that these guys are using, then what's going to happen? You're going to start to perform better, and you're going to have more resources to understand what trading decisions you need to make outside of just simply scrolling around on a chart all day and thinking that fundamental analysis or to do a deep dive in markets is to go over to the economic calendar at Forex Factory. It's a little bit more than that, okay? So the first hedge fund that I want to talk to you guys about today is Bridgewater Capital. Now, a lot of you guys may know about Bridgewater already. It's the largest hedge fund in the world. It has over $150 billion in assets under management, right? But this is ran by Ray Dalio. A lot of people know who Ray Dalio is. He's a very popular guy. He's Diddy's mentor, okay? But Ray Dalio has a very simple investment approach, like most of these guys do. And if you guys take a look at this snippet here, you guys will see a synopsis of what the methodology is used by Bridgewater Capital, right? So they use economic trends, right? They look at global macro events, right? And they like to make trading decisions based off of the actual economy, right? And this is something that I just really want a lot of the retail guys to start to move over into, because once they do, you really start to pick up on a lot of the same commonalities and a lot of the trades that these guys are making. And I know a lot of people have mentioned that Ray Dalio has not been the best performing trader in the past few years or so, but at the end of the day, his firm blew up throughout 2000 to 2005 because of currency trading. It was actually one of the most popular products that Ray was trading. And again, he was using economics, trading the dollar back then, right? Trading the pound as well. Once the pound left the European Union, there was a lot of volatility there, and he was able to capitalize on that, but it was all about what was happening from a fundamental approach, right? So next, I want to talk to you guys about Soros Fund Management. You guys know George Soros. Everyone knows George Soros. We actually already made a video on George Soros, but at the end of the day, we know that the trade he took that broke the Bank of England was a fundamental trade, right? So he wasn't going to the charts, looking at the technicals, trying to figure out exactly where and when he should get in as it relates to trading in that capacity. We understood that he was basically trading an event where basically he could understand and see that the pound was going to depeg from the German mark, and that's exactly what happened, and the pound just sank. That was a fundamental event that had massive implications on the currency prices that he was able to take advantage of. So Soros Fund Management, he's given away about $34 billion of the money in his fund, and I guess when George Soros dies at some point, he's going to give away all the money, but up until this day, he's still using fundamentals to trade currency, stocks, and commodities. But why are these guys using fundamentals? What is it that fundamentals gives them to give them a better trading edge in markets? Well, fundamentals give you value, right? Technical analysis gives you price. Fundamentals give you value. Whenever you're looking at something from a fundamental standpoint, you're trying to understand internally, okay, its intrinsic value, which gives you a better representation of how it should be priced, right? Before you buy a car, what do? You check out the engine, the transmission, right? Are the wheels aligned? Okay, does the thing work? All right, and guess what that is? That's a fundamental evaluation of that vehicle. If someone tried to sell you a car strictly off a price, and you bought it without going deep or understanding what to look at, you're considered dumb money. Well, the same thing applies here in markets. Many of these institutional investors don't just strictly buy straight off of price, because price only tells a tenth, maybe, of the story. So much of what's happening behind the scenes here is going on in the real world. And the better you can understand what's happening in the real world, the better you can understand how these assets are moving, basically what has driven these assets, the better you can capitalize on if these moves may reverse or if these moves may exacerbate, depending on what was happening behind the scenes, right? And so that's the study of value, price versus value. Price and value, that is your edge. When you have price and value, you have a very good opportunity to more than likely make good money in markets consistently. Obviously, you need to build some type of strategy around that. We personally trade a pullback strategy using fundamentals and technicals, obviously, because there is such a beautiful representation of a move to the upside, which was a fundamental catalyst, but we get to see that move from a technical point of view. Like even right now, we're looking at this Australian dollar versus this Japanese yen because there's this massive move to the upside based off of certain things that happened during coronavirus. Yet from a technical perspective, we've been consolidating around this high, around the 84s, and we're hoping to potentially catch a pullback back down into structure, right? So we are tying the fundamentals with the technicals, and that's exactly what these gentlemen are doing as well. Now moving over, I want to talk to you guys about Caxton Associates. These guys are animals, okay? So this is a fund that has about $3.9 billion under management, but now put 40% on that. So they're floating around somewhere in the excess of $7 billion under management because of such a massive year they had last year. They took two big bets. One was on gold and one was on the dollar weakening. Now, why did they think the dollar was going to weaken? And when did that bet come into play? Right? So if we head over to the dollar index real quick, you guys will take a look and see that there was a massive weakening of the dollar. And that's exactly why they had such a large return, because the dollar just shed so much of its value last year after a massive explosion we saw during COVID, because we saw such a massive increase in value, right? Many people were scared. This is a risk safe haven asset, right? And so when things started to get better, Mr. Bruce, who's the guy that runs the fund over there at Caxton, he basically said that there's going to be a massive decline here on the dollar with a massive spike in gold. We all saw how gold ran in price last year. Okay, so that was a big trade. Now, again, his main reason for selling the dollar was a fundamental reason. He did see from a technical perspective that the market was extremely high, but at the end of the day, he said in one of his letters to his shareholders was, hey, based on our fundamental evaluation of markets, we do feel like there should be a massive decline on dollar as the resurgence happens in the overall general economy. So he was basically playing a recovery in the economy based off of COVID. Okay, that was a massive trade, all using a fundamental ideology. So next I want to talk to you guys about AQR. AQR is a huge fund. Cliff Anness runs this fund, and he has $143 billion under assets, one of the top 10 largest hedge funds in the world, if not top 5. Right? And so they mention explicitly on their website the strategies that they're using. They don't say too much about it, so maybe not explicitly because they don't want to harbor and let everyone know exactly what they're using to execute. But one of the first things they mention, as soon as you scroll on the website and go to their strategies, you guys will see that a fund with $143 billion in assets is using fundamental investing. Rely on sound economic theory and analysis to help us deliver long-term repeatable results, right? And they actually mentioned a couple of things in on this page as well. I'll post the link in the bio to this particular page here, but they mentioned having a systematic approach. And these guys are trading systematically, yes, with machines, but they also trade discretionary, like us, basically making their own trading decisions with their own wherewithal, right? And they basically say that here, you guys can see a disciplined methodology underlying everything we do. Our investment process, built over 20 years, is based on continuous process of design, refine, test, repeat. So they're improving upon their strategy, right? One of the things that I always say is a trader with a new strategy is a shitty trader. You need to find a strategy that you trust, that you can rely on, and that has been proven to work, and you implement that strategy as well. That's why we've been using the same pullback strategy for 7 years. There's no need for us to go create something else or try to figure something else out, because pullback strategies have great risk-reward ratios, and it's harder to get faked out than some type of trend trading strategy or even a breakout strategy. Now, we love breakout strategies as well. That's actually the second strategy we trade. But the first strategy that we believe most retail traders should pick up first, because it's the easiest strategy to become profitable, is a pullback strategy. That's what we teach in the bootcamp down below. Okay, so AQR, amazing fund, big results over the past 10 years these guys have had, and they use a fundamental investment approach. So lastly, the last one I want to show you guys is Millennium Management, $43 billion under assets. Israel Englander is the fund manager. He runs the whole shebang, right? And I want to show you guys a little bit also about what their investment approach is as well. Okay, so they do a methodology called relative value. Now, remember, relative value, when you understand the relative value of an asset, you understand the price of that asset comparatively to other assets, okay? And it says here explicitly, our team performs fundamental research on companies both as generalists and specialists within a particular sector or subsector. So they're talking about the stock market in that case, but they also do macroeconomic trading as well. They're a big fund, 48 billion under management. Trust me, they're doing stuff overseas. They're not all just tied up in the US. Now, if you want an example of a fund that only trades stocks, you guys can go to Bill Ackman's fund, Pershing Square. He only trades stocks. He does a little bit of hedging, but most of his fund, over 50 billion, I think at this point, under management, is ingested significantly the stock market. Quite interesting methodology that he has there. So all in all, guys, think about this, right? You guys can't really find a top hedge fund, a top macro hedge fund. A macro hedge fund, a global macro hedge fund is a fund that trades currencies. You guys can't really find one that says their main way to execute strategies in their portfolio is just strictly technical analysis using support. You guys don't see that language anywhere. It's because technical analysis only exists in the retail world. As significant as it is, it only exists that significantly in the retail trading world. These firms definitely use technicals, 100%. But retail traders overemphasize the use of technical analysis relative to professional traders. And that's what you guys need to understand. Professional traders have an equal emphasis on technicals and fundamentals, and that is going to give you guys the best edge that you could possibly imagine in trading. Okay. Now, if you go to a firm and you see that, hey, look, here's a firm that says they use technicals, show me them, post them in the comments below. I'm sure we're all want to take a look at them, but all in all, the top 100 hedge funds, the top 100 macroeconomic hedge funds in the world, they all use fundamentals. Now, sure, I'm sure if you go down to you find some firm's website that has $1 million under management, okay, and they're just using some type of technical indicator, maybe, okay, but literally the 100 largest macroeconomic funds and the top 50 performing funds in the entire world use fundamentals. You guys should be using fundamentals too. Period. Okay. Yes, there's a lot of hearsay on the internet about technicals and about what you should be doing, but don't worry about what other people say. Do your own research. Your own research, you'll realize that you have to do a little bit more fundamental research and you have to understand how these economies work to a higher capacity. That's going to give you guys an amazing edge. Okay. So that's it. That's the secret. The secret is right here in front of you on the web for you guys to find. You got to use fundamentals. You got to use technicals. You got to use sentiment as well. You got to have amazing processes that help you define your trading strategy to a higher capacity. All right. So if you guys have any questions, let me know. We do a lot with fundamentals inside of our fundamental bootcamp. The link for that is in the bio. Again, I'm Cleveland Bishop. I'll talk to you guys pretty soon.